Hey everyone, welcome back to another video. This first trade will be a long scalp. In this 15-minute time frame, we can see the market's movements within this 100-point trading range, which is marked by the day's previous high and low. As you can see, the market has been fairly volatile, but it has shown some signs of stability in recent hours as price moves sideways. It will be interesting to see how the market behaves moving forward, but judging by this recent sideways movement on low volume, an indication of consolidation as opposed to downward pressure, a triple bottom, which marks the range's structural low, this break in market structure, and a double retraction of price into both of these 15-minute imbalance zones, and more importantly, the full closure of this one. All this market action suggests that price can start expanding again after exploring these inefficiency areas in the form of a liquidity grab. And before we switch here to a 1-minute time frame, we see that there is an evident upward tendency. Furthermore, price is still printing below FIP's 50% retracement level, which technically means we are oversold. Now, as demand moves into this area of the market, this level now becomes a focal point for us. This also suggests that there is a lot of interest in buying at this region, and that any sellers who are keen to exit their positions are likely to find willing buyers. This could be a good opportunity to enter long, with a view to riding any potential upward move that may occur if the buyers are successful in pushing prices higher. Of course, there is no guarantee that this will happen, and price could just as easily reverse to the downside. However, these demand areas do suggest that there is a significant interest in buying at this level, which could provide support and lead to a move higher. So based on the current trend, which marks a clear shift in price action from the prior activity, I would expect price to reclaim these low structural levels first before hitting this imbalance region. That said though, we have to get some acceleration into these relative highs up here first and see whether or not our approach was correct. So at this point, all we have to do is just see how it goes.
Order filled.
I managed to avoid getting stopped out by pure luck on my first contract.
Target filled.
Went for the top of the imbalance zone on my second contract. However, price didn't pump right through it. It stopped me out first and then hit my price target later. Okay, with this trade out of the way, let's just move on to the next one. This 1-minute entry will be on the short side. So after the market adds 50 points to the tape and reaches a plateau via this liquidity grab and closure of this 15-minute imbalance, the price reverses and starts to slowly decline as supply gradually rises. This results in prices dropping below the 37.30 mark. However, demand steps in and props up the price, leading to a short-term bounce that prompts a failed test of this resistance level, which, as you can see, corresponds with the bottom of a 15-minute imbalance zone. So this imbalance area is clearly a point where the market is out of alignment, so the probability of the current mini trend reversing is rather high. Now, this probability is based on the idea that when the market is out of balance, it is more likely to revert back to its mean. This is when the imbalance trading strategy actually comes into play, as it can validate a potential turning point. And as you can see, the bounce, despite being relatively strong, was short-lived, indicating that there is potential for further price movement downward. In addition, the supply side continues to exert pressure on prices below the 3740 area via this sideways action. It's worth mentioning that recent market activity appears to be following a classic bearish continuation pattern. This is based on observing the formation of this descending trend line, as well as a break in market structure, which also coincides with a breakdown of this tight channel. So, based on these technical elements, it is likely that we will see further downside in the market, obviously in the short term. That's why I do think that the best point of entry should be the mid-3732 level, which, as you can see, corresponds with the same break of structure I mentioned earlier. Obviously, we are targeting this imbalance region down here for profits because of the market's tendency to almost always come back to fill them.
Target filled.
Alright, so that should do it for this trade. Thanks for watching, and if you guys like the content, please make sure to like the video and subscribe to the channel. I would really appreciate it. With that said, thanks again and hope to see you in the next one.